So we're here at the close of the second quarter of 2020, and I want to walk a little bit through history right now. At the end of the first quarter, it was doom and gloom. People were really scared. Coronavirus news. Now, who knows what's going to happen going forward, but I just want to talk about what's going on right now. Back at the end of the first quarter, I was doing a lot of videos, and the videos were on coronavirus in the market, half empty, half full. Stages of grief in investing was one of the videos that's on my website. And this is why I coach so much, because coaching is about teaching, educating, providing discipline, and providing perspective when the sky seems to be falling. Now, who would have thought at the end of the second quarter we'd see a headline like this, which just showed up in the Wall Street Journal today? U.S. stocks finished best quarter in more than 20 years. People weren't talking about this happening by any stretch of the imagination at the end of the first quarter. What do we need to be thinking about right now? Now, if we look back at the past 5 years, past 10 years, U.S. stocks have been on a run. Large U.S. stocks particularly on a strong run. And a lot of people saying the market's doing great. And I go, which market? Because you have large companies, you have small companies, international markets. They haven't done as well as large U.S. stocks. Now, large U.S. stocks have done so well that if you look at a total index of the U.S. stock market, and I always tell people watch out for these things because they're weighting the bigger companies more heavily, it is really skewed. If you look at what are called the FANG stocks, Facebook, Apple, Amazon, Netflix, Google, and they often add Microsoft to the end of that list of companies, they make up about 18% of the whole index. Just 6 stocks make up 18% of a 3,500 stock index. So 18%. 0.17% of the companies make up almost 20%. Think of it that way. It's overwhelmingly, it's mind-boggling when you think about it. So we need to be really conscious of this as investors, because you may be really exposed to something that could, looking back, be a big mistake going forward if you have too much money in too few companies. Be really conscious of this stuff. You know, trees don't grow to heaven. Make sure you know what you own and how you own it.